GBP JPY is holding above 216 near its highest zone since January 2008, and the Bank of England decision is the next pressure point. The move is not random. It reflects persistent yen weakness, higher UK rate expectations, and carry trade demand. GBP JPY holds because the market is still rewarding the interest rate gap between the pound and the yen. The risk is that one central bank sentence can change how crowded that trade feels. The confirmed context is the policy gap. Japan's yen has stayed under pressure because the Bank of Japan remains linked to very loose monetary conditions. The UK side has been supported by sticky inflation, wage growth, and expectations that the Bank of England keeps rates elevated. That gap supports the carry trade, where investors borrow lower-yielding yen and hold higher-yielding pounds. It also means the pair can move sharply if that rate gap story is challenged. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is carry. A trader can borrow yen at low rates and put capital into pounds or pound-linked assets with higher yield. That works while risk appetite is steady and the policy gap stays wide. But carry trades can unwind quickly. If global markets turn defensive, investors may buy back yen, closing the same funding trade that pushed GBP JPY higher. That is why the pair can look strong on trend and still be vulnerable around a central bank event. The affected side is traders holding long pound yen exposure or short yen positions. The levels are clear enough to matter. Resistance is watched near 216.5 and 218, while support sits near 215 and 214. A hawkish BoE tone could push the pair toward the upper resistance area. A dovish tilt could make traders lock in profits quickly. When a pair is near a multi-year high, the same strength that attracts buyers can create sharper downside if the catalyst disappoints. The open question is nuance. If the BoE simply holds rates, the market may look past the headline and focus on the vote split, inflation forecasts, and guidance. More hawkish members would keep the rate gap story alive. Softer language about future cuts would weaken it. GBP JPY holds into the event because the current structure still favors the pound, but the confirmed decision is not the whole story. The forward message is the part that can move positioning. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is the reaction after the decision, not only the decision itself. Watch whether UK gilt yields support the pound, whether Japanese data changes yen expectations, and whether GBP JPY holds above 215. A close above 216.5 keeps the 218 area in play. A break below 215 would warn that the rally is losing control. For this pair, the practical read is event discipline. The trend is strong, but the BoE tone decides the next test.